Hi, hello. Good morning. Welcome to another ES Futures trading stream. Today is Thursday, March 14th. It is 9:14 a.m. Eastern Time in the US. It is a new day. Wow, this contract has really. This is March, coming to an end. We have less than 50,000. Oops, I make a mistake here. And now we have and pretty much everything is now has folded into the new one. We have sold 270,000 here. Now we had PPI today at 8:30 a.m. and we have a spike. We didn't have a spike here. We say we have a little spike here, right? This overnight, but it would be different if this spike were, from the whole range, right? But still, we have a spike here. We have this spike to the downside, which has cleared this inventory, this part, these late longs that were buying the market from previous high, from this week high. Yesterday, if you done your homework, we could have seen, in the daily charts, or where is this? It is not. This. I had to change this to M24 here to see it better. No, we got no excess here. We got no excess high. This is Wednesday, Tuesday, Monday, and Friday. Friday is the first day in which the current contract, in which June has really volume. It started at 1 million here, and I will consider from this point on, right, the current contract. The contract. If I am going to talk about the ES, that's the ES. But also remember the ES is an index, right? And futures, in this case, ES are not traded like stocks, right? No, we are in futures markets are different. It's different things. This market is holding, boy, barely holding here. Let's move this trend line around. You can place it wherever you want. You have a trend line there, you have another one here, and just pick your trend, right? Let's buying from mechanical buying here. If you check, when I check, this, the Magnificent 7, for example, it's even 8, including Nvidia now, right? Because I can see tremendous weakness in this. Here, for example, Netflix here, Meta here. This is barely holding here as well. Microsoft is trading in a range. This is the fourth time this market was bought from this level, and every time it's getting weaker and weaker. Now it's the 50. It was bought exactly from the 50 here. Not just the level, but 2 times from the 50 here and here. Apple has had a significant correction. Unbelievable what's happening with Tesla. Look at what's happening with Tesla. Okay, when Tesla was down here last year, I was thinking that this market actually could come all the way down to here. I wonder what can happen. No, actually down here. I thought at this time this price, is a really good price. Good, excellent price for this stock would be 50. It was super expensive, but who knows what's going to happen. It's coming back to this. But what I don't like from this, but from this chart, from these companies, look at this high here. This range could have, may have or could have been, this market could have been going higher here, but the same distance, right? Same distance. It just happened to went to the downside. Now there is some rebalancing, a consolidation in Nvidia. I still think that the 1000 is a possibility here, and I believe that this stock will remain high or even go higher until there's a split here. What else? Now let's check these indices. We have an inside day, inside day in Nasdaq, an inside day to the upside in the ES. Russell is buying from, again, pick your trend here. I think this is the weakest one. Now, all markets have made new highs. This high is weak. Checking our daily time frames, there's no change in the monthly. Volume is kind of like on the lower side in the monthly. It's lower side, which is not bad, right? When you have a rally. Nothing to see there, but the weekly is showing some signs of weakness. And I was bought here, you have a gap here, mechanical buying, non-excess here, another non-excess here. I think the next thing is the market will buy here. Why? Because that's what the market is doing, right? Buying from previous highs, buying from previous highs, buying from previous highs. Once the market has a breakout, that breakout is support. Immediately becomes resistance, becomes support. That's the ultimate technical trading right there. How it's happening. The daily is very. I consider the daily. I consider the structure of the market to be very weak, very questionable, especially this area here, right around the 50.66 is this one. When the market has had, this is something that I'm carrying. I am going to carry on. I'm carrying on, moving forward, right? Because all this rally came from this go, no-go level. Identifying that level is important as well. I was ready to go short here if the market clears this level. Because there was nothing, there is actually nothing here, nothing holding out all of these inventory here, all of this holding the market. But momentum, as long as market has momentum, as long as we have a trend to the upside, momentum remain to the upside, and momentum can take the markets to extremes. Right? What happened to us traders is we may perceive weakness, and I am going to be short before the market starts to break, so I'm going to maximize my winnings, right, my profits. And until that happens, more likely I will lose everything. Or when that happens, I won't be ready, right? I have because what usually happens is I would be short in the market and being stopped out so many times. for a time when this break finally happen, or there is some, meaningful correction, I won't. I don't, you know, I would be afraid to go with it because of what happened before. Trend, all time frames are in sync, trending higher, 4-day, trending higher as an inside bar. Yesterday was an inside bar. Seems it looked below. This week looked below with volume, another break with volume in the weekly, looked below and failed. Now we have a breakout to the upside, another breakout to the upside in the weekly. Will it have continuation? I don't know. Now, all right. What's next? Now, yesterday, Jim had a webinar. But he had this level as a pullback, right? It was a weird day. The thing, when you start having your own opinion of the market, I thought yesterday what Jim said. What Jim said is he saw a strong market, right? I didn't see it that strong. I had a disagreement with him, but there is something, and this is why it's very helpful when you have somebody that has, in this case, a lot of experience, right? I don't have by any means not as much experience as him. And what happened this day? Now you have a break. This high, market made this high, from the opening, right? Why I classify this day as a week? Because this day the market struggle. It has really hard times, right? Really hard times. It just takes so much time to close this really small gap, really tiny gap, for the ranges that this market is having. And the next day the gap was closed really fast, and I based my definition of the weakness, or I classified this market as weak because of that. And what happened afterwards, the market was just moving its way higher. It did not make a new high. This was excess. And then there was a correction here, right? But I had this weird feeling, right? There was a really weird feeling when you start feeling. I didn't see this as a rotation. Okay, I see this. It is a rotation, but kind of like a rebalancing. And sometimes the market gets too long that it needs to break before it can rally. And what I also had is the pullback, pretty much very close to halfback, what was halfback at the time, and very close to the opening too. But what he paid more attention to is to the fact, right? To the fact the market make a breakout of the daily high, and then it tried, right? The next thing that happened, makes a high and tries to, to get back inside, but this market couldn't take this low, the previous period low out. And this was really, I got a loss here because I had positioned myself somewhere in here, right? I saw like a good odds of market coming back inside previous range and working its way down. But what happened here, I guess here is when this market moved 1, 2, 3, 4, 5, 1, 2, 3, 4. Yeah, it moved. It just made POC wider here, and it didn't move lower. All right. And I took a loss here. And this was more important to him. And what I did, I just got this as a weekly level here for the next day, for yesterday. So that's part of the adjustments, right? If there is somebody who knows more, who has more experience, okay, I may not know at the moment why he's doing this or he's doing that, but I don't disregard, that knowledge. I try to understand why or what he could have possibly seen in the market, and then do the adjustments. No? Then try to do some adjustments there. Now, into today's, we have a spike. Look at this way. The market is going to open right below the spike, right there, right there, very close to the low. This spike, and from yesterday, what I have from yesterday is this inside bar here. Now we have this break that remove this long inventory, and we have an inside bar. Inside bar. The closing was an inside bar. This could have been, and the most important piece of information for me here is how far the market retraced. Way back inside value area, right? From these lows here. This low, this pullback is still, market did not correct this pullback. This is weak, but all this long inventory has been removed. Now we have inventory that is 100% long. Let's see if this market has a correction. Again, it is opening inside previous day range, which increases the odds of rotation. Another thing that Jim said yesterday was, that this contract was going to be settled yesterday too, but you can see it's working here. I still don't know why he said that, because I understand, the settlement happens. In this case, I guess is next Wednesday, but this contract stops trading. It's not being traded the third Friday of the month, of the expiration month. Now, the same kind of opening. Remember the opening we had yesterday? No contraction to overnight inventory, which was was long also, right? No, it was rebalance. Yesterday, overnight was rebalance, but there was nothing. Right? Now we have 100% long. 100% long. Also, again, the market has not attempted a rally from the opening. It still is opening in the same direction as yesterday. All right. Thank you. Hey, Yaya, how are you, man? I don't know if you are here. Here, I mean the stream. All right. Hey Sam, standard, what's that? Start time 1 hour 18, end time 9:30, number of days, display, high level, line stop time. Okay. All right. Now, another thing for today is that this is what we have here is an inside day. All right, we have an inside day with value to the upside. Okay, look at how wide this range is, how narrow yesterday range is, and the location of this range is right at the high. Okay, right at the upper side of this. we don't have excess. This is, I'll consider this a non-excess high or weak high because they are too close to each other. The market shouldn't have any problems taking this high, right? And making new highs. Now, what can happen if what you expect or if what is expected doesn't happen? That's it. Still, again, just like yesterday, tremendous pressure to the downside from the opening, you know. Right? Didn't see volume is still low. What's happening with the Nasdaq here? Let me check Nasdaq as well. Nasdaq, I think Nasdaq has a better inside bar, and I say better because it's kind of like a more at the center, right? More at the center. You know, the trade here would be go with breakout of the inside bar, right? Buy, but that's I don't trade Nasdaq. Okay. And the opening, and Nasdaq is opening right at the center of the inside bar, and that's balance. That's perfect balance. You have a really nice balance there in that market. How much volume? Let me record this thing. This could have been very easy. This could have been a counter-action to overnight inventory. Now this market is opening right inside the spike, the overnight spike. And as I say, I wouldn't consider, you know, like a technical spike because it didn't take. It was a breakout of previous bar, not a breakout of the range of the overnight range. Now I got 46.225 here. How much volume? This one has 295. Alright, 295. 803. And notice the evolution, right? This is the current contract. You know, this overnight 160, 300, 400, and now it's, you know, it's from this day, from Friday, it's going lower and lower and lower and lower. Right? It's pretty much done here. This is overall. This is all the contracts, all the futures here, right? I got a really high volume on Friday, Monday same, and now yesterday, you know, this one is matches or is over basically, and this is, you know, notice how it increases, right? This is June, 100, 300, 200, 300, right? Yeah, I guess it's in full. Okay. Did you see that? And this is what is very misleading. It's very misleading here, what happened here. You know, we have the same opening as yesterday. Oh, okay, the market we are going to have a great break, right? Just like yesterday. Now, I'm going to be short. But this is the inventory, the conditions of the overnight inventory is different than yesterday, right? Yesterday, there was pretty balanced overnight inventory, and now today is 100% long. It's a lot of long. All of the trade, all of the overnight trade happened above zero. Well, all of this, and these kind of movements to the downside are most of the time a correction to overnight inventory, and that's also a trade, right? It's a trade that is popular. when this market had this print, there was full negative here. Everything was negative here, and this was the first time, the first thing that happened. And once this was here, it never came back, and until this high. This opening is taken, right? So money, remember, this is an inside bar, inside day. They also chop at high. The closer to the center, the higher they also chop. It came back really close to center, really close to saddle. And the day, all time frames are in sync to the upside. All time frames are trending higher. No excess here, all time high really close. What's going to happen here? Who knows? Well, something that I'm carrying also is, in the same way how we have, for example, this is huge volume, right? Pressure, this is a pressure to the upside, right? But the market came back, right? Has a pullback here. This kind of, but even bigger, way bigger than that, and way higher volume. And this is just technical. Right? This is the technical part. Happened here. Okay, happened right here. Added to the fact that was really close to POC, previous day POC as well, and the fact that market closed the gap. I consider this low weak, even though we have really nice excess here. And I think this is too much for me, too much excess here. If you put these 2 days together, you will see, or I can see a truncated, truncated profile. Let's see if I can do that. Look at that, right? Looks like a P, huh? Some traders have, merged these charts as well, but it will depend what kind of trader you are, right? I saw some traders doing that and taking this level, for example, this POC. Okay, I had POC here, value area here, value area high here, and they use those things. I don't do that. Where was the POC? Here, right? Value area high. Well, this here, value area low, nothing. It's a combination of these 2 days. I don't do this. I don't do that. Don't do this, and neither do this. And it is, if what you are doing works for you, well, keep doing it, right? If it doesn't work, I consider doing some adjustments. And all what we do here is, I guess, as Yaya said, if you are there, yesterday you said that you're building your own perspective and point of view. I think that's really important, thing to do in the learning process. When you start doing that, I remember that time. It was hard, right? Because you have a lot of biases. We make a lot of mistakes too. And one thing that I noticed when I start doing that is I start having my own opinion, my own point of view, and always use GYM as a benchmark, right? And the thing is, the first times, when I began to do that, when I began to do that, I may have, attended one of GYM's free webinars, or maybe read one of his tweets, or maybe it's videos, I don't know, they'll have videos all the time. And he may have seen or said something different to what I did in my homework. It just gave me second thoughts right away, and I kind of scratched what I did, right, just to do or to try just to assimilate what he has said, right? But that was his opinion, that was his point of view. What happened is, the most times when I did that, I had bad days. Right? I had bad days. With time, I started to stick to my opinion. I may be wrong, I may have been wrong, but it was me who was wrong. So I can make the adjustments. You cannot make the adjustments if you don't have your opinion, or you cannot adjust somebody else's point of view. It has to be yours. And at the end, all the answers we look for in this business are always, or were always inside us, inside ourselves. Another thing that I want to say is, in the learning process, I just, it's kind of like a circle, right? At the end, this is my case, right? In my case, at the end, I come full circle, right? There's a time that when, as Jim say, you have to Jason what you have learned, right? You have to get rid of your mentor if you wanna go to the next level, if you wanna take the next step, because otherwise that will, like anchor you. It won't let you move forward. And the ironic thing is, once you do that, you can actually be in that position. You can understand his or that point of view much better. In my case, it's about the same, right? It also helped me to understand my time frame. My time frame is different than Jim's. Even though we are short-term traders too. All right. More. Mike is trying to. I wonder what can happen to the. Let me see about where this low is. This is the low of this inside bar. Okay. Now there's an action that has ended here. Right, we have a significant break. The market was. At one moment time, I guess we talk about how this inventory was getting long. This is the low of the inside bar. The inside bar has a break to the upside. Still inside day. It seems like, it looks like we're going to have kind of like a really good volume here. We may have volume, we may have this much. We don't have still 20. Okay, now the next thing here could be this. 52, 23. 52, what's that? Oh no, that's not 51. That is, what the heck is this, right? 51.60. Oh boy, that's really 10 points. All right. Value is starting to overlap lower. From Jim yesterday, what happened yesterday, now it makes sense, right? This represents change, and trading is about change. There's change here. Really good volume here. This seems that we have more than. Looks like we have more than a Okay. This law has been corrected now. Oh boy. Look at this. This is the first period the market. This is tremendous amount of weakness here, right? Market's going to get out. Seems like it's going to get out of previous day range in the first period. Now, look at this volume here, really high volume here. Right there. This week. Why I don't? Oh no, it was this one. My bad. It's not this. My bad. Sorry. This is this was the inside bar we have yesterday. Okay, so there's a breakout of that inside bar to the upside that has failed. Boy. Now this is a very weak market. Okay. Single printed out of yesterday's range. I thought that these ones were expensive at 10, at 9. Now are how much? 18. Yeah, you see. I was checking these ones. Well, yesterday it took the whole day for the market to develop, to give us an opportunity. Now it was right from the opening, right? We never know when it's going to happen. Really don't know. Now one time frame higher ascended in the daily. $51.96 is support. $51.93. Really good volume. This was the first thing, right? We noticed, huh? Volume, huh? Volume was going to be unusually higher than yesterday. I had to react fast here. $51. What is pullback low? Yeah, 51.44. 51.40. Oh god damn it, that's a super expensive now too. There's a huge amount of single prints here. Hard back. Oh. Never mind. It's coming. Let's check this one. That's the 44. Here. And let's see now. I mean, Nasdaq is right inside the single prints. The year has not come here yet. And this was, remember when we were talking on morning that this was considered this like too much single prints, and this week here, this level seems so far, man. Now I have medium volume here, right below this low. The market didn't come back to check this low, right? It's right there. It's right here. Right at this pullback low here. Now, can you understand now James' point of view? Right? It all started here, this day. You know? And now what happened yesterday? What happened yesterday is we have changed. Something has changed in the market, even though the market develops, even though we have prices higher, right? Also, you know, what can happen if what is expected doesn't happen. For the market to take these highs, it didn't require that much. It's really close, and the all-time high is also really close. What happens if this doesn't happen? Now we have some fuel here, right? All this overnight inventory is long, 100% long, so there's something here. There's liquidation on this long inventory. Now, how do I know if there's something else or more than that? Could be, you know, when the market starts, when we notice at night 47 that volume was going to be higher than yesterday. So possibly there's something going on here, right? I don't try to guess what will happen, but I try to figure out what is happening. And by doing that, and this is also kind of ironic, right? It's very counterintuitive. By doing that, you have better odds to figure out, to develop that feeling that what can happen. And that comes naturally. You don't think about that. You start thinking in odds. All right. Hey, Yaya, how are you, my friend? 9:56. 8 period is contraction to overnight. It is, right? But it seems so far it is more than a counteraction here because I have more volume relative to yesterday. Okay, relative to yesterday. Now, downside continuation. Okay, I'm wondering here what I am trying to do something here. What do I monitor for downside continuation? What do I monitor downside continuation? I have this level here from this day. I'm carrying this level as a mechanical, it was very close to half back, not exactly to half back, but very close. And this gives us a range too. Right? Gives a range. There is a breakout of this inside bar, breakout to the downside. Right? And what is the trade? Right? In the same way, how we had a breakout of this inside bar, market was compressing here, and the breakout happened to the downside. Now is the time frame that the breakout is happening in a different time frame. Now, another thing that I am thinking here is tomorrow is the first day in which June is going to be all by itself. It's going to be all June now. It's all going to be all June. I think Friday can give us a kind of like a good idea what can happen down the road, for the rest of the contract. Because what was happening is Friday, new highs, don't try to short the new highs, and just because the market was keep going was moving, you know. It was crazy to go short. Now check this out, man. This is the same thing. We have tremendous amount of volume here at the lower side. You know, tremendous pressure here to the downside. Right? We had the same thing here. The same thing. We have it right here. Now, this day didn't work. You know, this day, this kind of sellers, the sellers that we have here were just overrun and were forced to cover, right? And take big losses if they don't cover. Is that going to happen again? Who knows? Now this, I don't remove the reference. I will take this one out because I consider that corrected. This one also, this is Jim's, right? With Jim was talking. What matters, what Jim said yesterday, is the concept, the change. Now markets don't always move in straight, right? There's always some pullbacks and all that stuff. I don't think so. Laggard shows, I don't know. Look at the volume we have. This has really nice opening volume. The fact now, I'm not saying that the market cannot come back here, right? I'm not saying that, but now this market has shown, has come back out of the previous day range in the first period. That's a sign of weakness. Look at this. More volume coming here, So that's tremendous pressure to the downside. But if those guys are overrun, that's something, There's something there too. Now let's see if this market can come inside the single prints. This is now monitor for continuation, huh? This, come on. Monitor for continuation. I will have this level here. These are the single prints. There is nothing here. There is nothing, absolutely nothing here. Down below. The market should have no inconvenience, no problems whatsoever to go through this area here. Now there's some taper. Notice I think this level here can be support as well. Market may find some buyers here. This is not good here. This is not good here. Buying from right from this level here. This level has been corrected. There was all of these longs, all of this action happened from this area here. And a change, right? Change. What happened yesterday? And that's something that I learned from Jim. I didn't have this as a pullback, as a pullback, late pullback, right? When the market did this thing, I guess I have a short bias. But when the market did this thing here, down here, I just closed what I had is I I was hesitant to go short here. Here, somewhere in here. I didn't go here. I did have something here. When the market took this low, came down here, right? Because how do I know I'm wrong? If the market came back inside this range. And now, remember, markets don't move in a straight, in straight line, in straight direction. There's always some pullbacks here. The market has come back to my entry price. Still did not take this level here. Remember, this is the level you said you wanna erase this level, which is yesterday's high. I mean yesterday's low, right? I consider this level taken, but I still leave it there. To see how, what I do is I monitor, I use these levels to monitor the market, what the market does. Right? If I see, for example, the market coming back right here and start selling, right, one tick on this or one tick above and start selling, so that tells me who is doing that selling, right? It would be different, the market doing some pullback here or here, for example, and then continues way lower. Also, what do we have here? We have this value very low. It may be kind of like a little bit further back in time. It has 2 days. This reference is not for today. This is hard back, but I can avoid to notice this hard back here. Traders may see this level here. And why I decided to go short here is because I saw this. What happened? Oh, I guess I saw there was bigger here, over here. Then it came here. Oh, it came here as well. And I decided to hold it here. Well, I guess I don't remember now, God. But what happened here is I remember what happened this day, right? So what are the odds the same thing happened twice, right away, right? And let's do what works until it doesn't work anymore. Now all the rates are gone. All these rates. This can be now really huge volume, but if it has become wide, it means now that it's lower relative to the period itself. And this is part of what I do, right? This is what I do different. I'm starting to do. I do some things that are different to Jim, but are mine. Those things are mine. One of the things that also I was kind of like, I have my doubts. Okay, wait a minute. Let me see something here. Can you explain why you get out in below period? Thanks. Oh, why I get out? Because tempo. Because the market struggle here. There was this reference here, below was right there. Right? This reference was there, and there is absolutely nothing here. This is single prints. These are single prints here, and the market should have no problems whatsoever to go through this weakness. There's very thin area. These are single prints from this day. The market doesn't need much to go through this. Just a little bit of push here, a little bit. Market's having volume. It could have been through here. Now, I look like a smart right now. Oh, that was a good day because the market has come back all the way up to here, right? Yeah, sometimes, and that's the thing about your strategy. You got to stick to your strategy because a lot of times I will see the market here, for example. I say, oh boy, what a stupid, right? How dumb I am. I should have kept my position. But those are the things that you develop with time. This is trial and error. There will be times that when you can be, you may have seen something here and still be short, right? And still be short because this is this level is not particularly good one, right? There is a weakness in this market. Another thing you could do, you can have down here, and this is what Jim does. This is a lot of single prints. This is a lot of single prints. So pullbacks is in a pullback, little pullbacks in the odds. So what he does, what you can do with time, is you hedge your position. Right? You hedge your position. You either, if you are trading options, which is at later stage, right? Because options seems easier, but it's really hard. Right? It's harder than trading futures. You need to understand futures before going to options, because it may seem easier, right? But it is not, and that is misleading. The market was going through A, B, and F, would you have more stock at A, B? No, I was trading. What I did, I was trading puts. Look at the puts. This was the one I did, the 51.20. Really fast. That's another reason why I closed as well. Because and that is down here. Around this area, around this support area here. That's what I have. And I still have those ones. I will have this thing open. Doesn't mean, because I don't want to give you any bias. I was trading options, and because that was really far, was not in the money, it would be different. For example, I was checking this 50, I guess when the market opened, we were talking here in the morning about these options, 51.60, which was this one here, right? What is this? God damn. That's the, no, there was the 51.40, I believe 51.40 or 51.60, I don't know. To be honest, I don't remember now which one. I think it was this one. I think it was this one. But they were kind of expensive. I say they were expensive. They were like 9 points. But those ones went, kind of, I was talking, and they were going higher and higher. They were, at one point they were 18. I said, my God. And this is the thing about the stream, right? When you say you decided to go ahead and open and do and build your own perspective and point of view of the market, I started doing the stream because one thing that when I started doing what you are doing now is I noticed that I get distracted easily. I was trading and, without realizing I was watching YouTube, doing a lot of stuff that is not unrelated to trade. And the stream helped me to focus, to regain my focus in the market. I didn't do this. That's the reason why I started doing. I don't do this as a business, because something I realized after is when there's some people that gets gets kind of like engaged with the stream, I get distracted. And sometimes I start to, sometimes see an opportunity, okay, something may happen here, I take a screenshot and post something on Twitter, or maybe talk about that in the stream, and I miss it, right? I miss it. But it took my focus out of the market. So what was helpful at the beginning, it becomes an obstacle. And this is, and you need to do the adjustments. What do you do? Right? In this case, what do I do? And those kind of questions are the answer to those questions are just in you. It has to be you have to go with your personality, what you need, something, there are some classic books, for example, this Mark Douglas book, Trading Song, and the other one is, what's the other one? uh, the discipline trade economy, they have a new meaning, right? When you read them after a certain stage, it is one you are, because you cannot see us, you cannot understand uh, what he says, what these people, accomplished people may have to say. Um, in my case, for example, you know, when I started this business, I had another business as well. It took me like 10 to 15 years, more than 10 years, to understand the basics of that business, you know, to make it repetitive. Um, at the 10-year mark, around the 10-year mark, um, is when I started to watch, you know, another business people talk about their business, about their success, how they become successful, and and I thought to myself, right, boy, if I would have heard this guy 10 years ago, you know, all the struggles that I had, I could have avoided. Um, Not understanding, right? And this is why I learned. This is what I learned with trading, right? You have to go through that thing. You have to go through that thing to understand. Somebody else tells you it's their experience. They can give you a kind of like a frame, you know, structure about how the things may work, but you need to go through that yourself. Otherwise, it's really hard to do it. And you cannot move. You cannot just transpose the experience you have in one area of your life to the other. And the first part of this business is figuring out, you know, dealing with your, you know, if you have any traumas, you dealing with your inner demons. That's part of self understanding. And when you do that, along with market understanding, the next step is, right, when once you deal with those things which are within you, then you can do the other thing, right? You can start building your strategy. You start learning about markets, market dynamics. How do I do this? How do I do that? Once you have deal with the first thing, with yourself, it's very important. That part is very important. Some people don't have. Some people are happy, don't have any issues, any traumas, but most of us have it. 1:30 p.m. news PPI actually value lower. No, my bad value lower. Every day is possible. Now, I see the immense amount of weakness here. You know, the fact, you know, now, what happened until now, right? March, look at this. Okay, yes. What happened until March? Okay, give me a second here. I guess I want to do something here. Now this is very mechanical here. Remember you said about this level, right? You ask if you erase this level here. Once it's taken, easily. There was times I keep it, there's times that I erase it, and it's just experience, right? And I decided to keep it, you know, just to monitor the mark. What I do is I remove the reference and just leave the mark there to remember, you know, because what happened is many times okay, give me a second here. Give me a second here. I'm trying to do something here. The market has come back to this low, right? Was bought from this low. The market is back inside previous day range. How much volume is this? How much volume is this? Is this like 15%? Something like that? Ooh, 20%. Oh, I was saying this, what happened here is the whole March contract started, where it started? Here? November, December, right? Somewhere in here. It's just straight higher. Now we have a new one. Right? What can happen here? Traders are very used now. Traders are used to buy the dips here. Buy the dips. But every pullback has been used to buy. What can happen now? That's something that I have in mind, right? This based on all of this, because this is a new cycle. A new cycle has started. This is starting, right? New cycle is starting. You know, how many times, how many quarters you have been through is a question, right? I have been, how many? 4, 12, 4, 8, 12, 16 cycles. How many times somebody who is trading for 50 years has been through these cycles? That's another thing, right? Now, regarding your question, you're asking, could you explain why using puts instead of classic position in market like I have a lot too? What's the difference between that and put? Did you only do? No, I don't do only put trading. It kind of like gives you just like, I mean, when I say that you come full circle, when you start doing what you say you were doing, you start building your perspective, you come back, you start having aha moments, and okay, I got this one, right? This is it, right? You start to building your own point of view and doing things. Notice where the market is right now, for example. It's trading back and forth around the reference you asked me just moments ago, right? There is something here, right? Trade, the short-term trade, you see, baiting that the market is going to have a rally, the market is going to have a downside continuation. What's it going to be? I don't know what I was talking. Oh, and when you start building your own perspective, building your own, having your point of view, you start building your strategy. And what happened, or at least that was my case, I realized, okay, I have this. Oh, finally, I have something here, right? And then I realized, come on, but Jim talks about this all the time. How come I didn't notice that, right? That's the thing, at least that's my experience. How come I didn't notice that? And I start, and that's why I say that when I come to that place is when you have your own opinion. What Jim, in this case, what Jim said, now is not what he said. Now that thing is mine now. And I wonder, right, why Jim don't say, why Jim doesn't say or explain his trading, how he enters, how he gets out. It could have helped me, okay, well, save me a lot of money, a lot of troubles if he did that. That's why I question why he doesn't do that. And I thought he was wrong. But then, you keep going. I realized also, another realization I had is, if he did that, I would be so focused on doing what he does instead of building my own strategy, instead of having my own opinion, right? It is very, I don't know, very counterintuitive. It's very questionable. I I think that there is people that could benefit from, could be that kind of if gene change that people could have uh, developed faster or better. But in the longer run, I guess most people get most benefits the way he does what he does. That's my opinion. And why I trade options. I didn't trade that option so fast. You know what I was watching, for example, yesterday, we had this market. It depends what kind of market you have as well, right? What kind of market we have, right? There are some times when something that some traders call this is a stop market, this is a limit market. What the heck is that, right? I didn't understand that, and people like that use trade price action or trade flow, use that expression. We discretionary traders have see that as a market that is hard to trade, as a market that is better to to be left alone, right? I don't want to mess with that thing. I don't want to mess with that thing. I just better leave the market alone and don't do anything here. And the options give you kind of like more time, right? Sometimes it gives you more time, or give you more time. How can I say this? I guess I can explain it better with the example. Yesterday, for example, you have this thing, right? You have this back and forth, back and forth, back and forth here. Range is compressing here. You have an inside bar here. You have a breakout of previous day range that didn't take, breakout of daily high, didn't take previous high. So this day could have traded to the upside. Okay, in the same way how it has a big break, it could have a big rally as well. So when you have, if I have a contract here, I have a contract, let's say a short, right, and the market moves against me right here. I have an inside bar. Now the trade on the inside bar is go with the breakout. And why you use inside how that trade works. Let me have it here. There's a lot of back and forth around this area, this yesterday's low. The inside bar, Jim says the shorter the better, right? Why a shorter is better? Because let's see if you go short here, which happened yesterday. Boom, here, right? When there's change. Remember the context also. This market can come back all the way up to here and still be good. Although a couple ticks here is still be good. But the distance that the market needs to travel here is still really short. It's not that much. Like yesterday, how much you have here? From here to here, from 43 to 40, that's 3 points, right? That's 3 points here that you have here. For 3 points, you can also have an option. The option, remember, when the market was in this area, I was checking kind of like around this area, right? I was checking this POC yesterday. There was a weak level there. These options were around that price, you know. But as the day developed, they lost value. They went all the way to 0.5. But you have 3 points, and the market can come all the way up to here, for example. And that option, that was 3 points, can be maybe 2 or maybe 1, right? And still, depending on how the market is doing this thing, right? The market is just struggling. It was doing back and forth. So those are different contexts, and kind of gives you more. In this scenario, it gives you more time, to figure out. Okay, this is good. This may work. This may not. What are my odds here? While if trading contracts, for example, if you trade a contract here, or you trade two contracts, when the market come up here, you are -6 already. That's when you see that. Okay, it make you second guess yourself. It give you doubts. Now the market is going back and forth on this level here. It's trading right in between this high, this halfback, and this low. Let's see how close it comes to this halfback. On if we have something here to the upside once this level is taken. Okay. Now this is not good for the short side. Maybe this is not good. But still, right? If I have a future here, God, man, this can have a big spike here to the upside. This is significant buy selling here. That's a lot. The market has retraced. Very emotional. It couldn't take this area here. Remember, this one, there's nothing here, right? That didn't happen. But the weakness is something that this action, what happened here. Now, what do you do with your trade here? Yes, good volume here. One time framing lower could not beat, has not been. It didn't last. This market didn't establish one time frame lower here. So the odds of rotation higher now are high. It has looked below yesterday's range. Now coming back inside previous day range targets the opposite side. But let's see what happens with value here. And options, and the risk of options is right. Those things can run against you. You can lose value really fast too. And when we don't understand well, we may think, for example, okay, you have a spike here. Now, yesterday we had a spike as well, and yesterday traded to the upside, to the downside. So I'm going to get these options here and these options here. And when whatever is traded fails, I close the other one, keep the other one, and take profits here and keep this, stuff like that, right? I guess those are called straddle and something like that. And I say, boy, if trading was that easy, it would be great. Everybody would be rich. No, it doesn't work like that. It's just done. Now, all of this action that's happening here right now came from your level here, the level that you asked me to. You ask if you. Where you got this? I know you asked something about erasing that level. And those are questions. For example, the more you can answer your own question, the better it's going to be. Okay, because you will be kind of like forced to do something that you don't do when somebody else is answering your question, and which is, observe what is happening, what happens when you do something. Why not good for the short side? Oh, because this was held back here, right? And C was right there at the high of this thing. Now, this is tremendous amount of selling that happened. And a lot of single pins here. There's a lot of single pins here. That's why I say that's not good for short here. And this is not, it's not technical. When another thing that that you had to develop is how to unfortunately the word control is not, I think it's not the right one. I cannot find a better word. How to control anxiety, how to control your emotions. And the thing is, we cannot. We cannot control our emotions. Because that's part of what we are as humans. And how do you control anxiety, right? Because what I saw is Jim narrates, right? Okay, the market is opening, it's taking this, it's taking that, the market is having downside continuation, the market is doing this, the market is doing that. But when do you play your trade? Why don't you go short? Why don't you go long? Why always? Kind of like a very specific questions, right? And that thing cannot be teach, man. I come to the realization that cannot be taught, that we have to learn that thing. But first, in order to learn, we have to watch, we have to observe the market. We have to be here. We have to be present here in the market. Now the market is grinding its way up. What happened until now is every time the market did this, the market just walks its way back higher and higher and higher and make new highs. Friday, we're close to Friday, end of the week, we are going to make a new high. Remember, there's no excess here too. Overnight, this could have been very well a contraction to overnight inventory. The difference is we have volume now. We have, which one? Oh, something else also. Something else. I forgot this. I put this in my homework. Let's check this. I have noticed the volume was going lower, right? But yesterday something interesting happened. What the heck is this, right? What is this? Oh boy. Look at that. Volume is increasing. Right? Volume is increasing. But this development happened at the closing, basically at the closing, because it was really kind of like lower, and at the closing 2 periods, or the last 2 periods of the day, the one before the closing and the run off period, are the ones that give us volume. So this one changed. But this is another sign to the one that Jim mentioned here. And these are, when you start doing your observations, you keep doing it. Every time you just add more, and then why do I have Nasdaq here, for example, right? I yesterday I said I was trying this market. Now it doesn't work for me, but it's very useful. It's very useful to know what's happening in all the markets. It's very useful. That's why Jim says he doesn't trade in a vacuum, right? when I start to repeat that, I don't trade a vacuum. I was just a parrot, right, repeating what he said. But when you understand, when you finally understand what is what you have, what lies behind that little phrase, it has a lot of meaning, right? And because what I do, only this is what I do. This is what he said. I had all the time, okay? All the time. I have every single day homework. Then I monitor also these markets, right? Gold, and when I started noticing gold, oh my, what's happening? There's something weird happening here, right? And at the end of the week, Jim talks about gold. Okay. So it kind of like it gives you some, some those that clues that you may have, you may be into something, right? You might be in the right path here. What's happening, for example, these are the bond market. The 10 is really high. It's not close to the lows, not close to the highs. Highs is way up here. And there's a flight to safety, right? I wonder, if the market's having a rally, why gold is having also a rally? If Bitcoin is rallied that much, what the heck, well, I think I don't like that thing at all. But there is change here as well. And I wonder what can happen here now. Can this market come down to here? And if you see this one, I didn't see this in the morning, but there's a really narrow range from yesterday. Look at this, really narrow range. This could have developed to the upside, but have a break. And this kind of pressure the markets have, because the market is so hyper focused on rates, and this kind of action puts some pressure in these markets, in futures as well. Now, if gold can resume the rally, but this could be some consolidation or some rebalancing here. All right. Now, this is what I watch. I also monitor, what's happening in the other indices. We talk also this week. Today in the morning we were talking about how weak this is. Russell is the weakest. I don't trade Russell. I don't know anybody who trades Russell. But this part of the show. We talk about how this market was barely hanging, right? Same thing that's happened here is happening in these two as well. The strongest was the Dow, and now what's happening with the Dow? Buying from support, right? This breakout here is a logical place. Nasdaq hasn't reached that level yet. ES is very close. These two markets are very close to this level. 51.93. What the heck is that? 51.93. What do we have in 59.93? We don't have anything. 51.93. We don't have nothing here. This is the single prints. And this is an area, and then we have the 5200 here. This is an area, okay? Well, this is the danger area, I would say. This is the danger area. This is a dead, very dangerous area here in this area. And here is when, traders take profits or start to hedge or trim the position. If they'll get out, they'll get back in down here. What Jim said. And you will see this a lot also, There's a lot of back and forth around these century numbers, and there's some resolution around this. It happens all the time, around these areas here, above and below. Another thing that I also monitor is, it depends what's happening also, right? That's why I check these stocks. I don't trade any of this, but I check what's happening here. What's happening here? Microsoft, I consider Microsoft being really weak, right? Buying from this 4 times has been bought from this level, and now it's having a breakout. Have double high here, having a breakout, making new all-time highs here. Microsoft. What's happening with Nvidia? Very questionable, and nobody want to touch. It seems like once this came to the market, when traders seems like when traders start to pay attention to this stock, Tesla and Apple kind of has paid the price, right? It seems like a lot of capital came out of these markets and into this one. And now, making new highs. Let's buy this market, right? This is new highs. Let's buy way out here. Why don't buy down here? Again, back around this low here. Back around this low here. And this, if this kind of trade or this kind of actions for today's continues, they will start to look, right? They will start to look like long liquidation, right? I want to see what happens to volume. Did volume decreases here? This would be if this volume remains higher, this has to be kind of up here. It is right around the center of the around the 15-minute mark. We have half of this. How much? Let's check James. How many periods do you have? 2, right? You still have 20%, around 20%, decreasing a little bit, but still higher. That's higher volume. 20%. Sometimes we see 40. Well, that's big, right? But it doesn't mean that market has to continue to do what it's doing, right? Remember, this is a market to the upside. It's a market to the upside. We have a breakout on the inside bar. Look at what's happening in Nasdaq. Buying from this low, exactly from that low. From yesterday's low, huh? So what this can tell me, this is the market's paying attention to this level here, and there might be some trading back and forth, and maybe a resolution later to the upside or to the downside. There's a lot of traders that are selling this market because they saw this coming out, right? They saw this market coming down. All right. Now, are you over trading? How many trades have you placed? How are you shorting the market? Are you buying the market because the market is going to go back to half back? It's going to make a new highs. The market is going to come all the way down here and close the gap. What is going to do? I want to be prepared. I want to be long. I want to be short. The market doesn't have anything here now. Now the first sign that remember opening inside previous day range increases the also rotation, right? This could have been very well a counterreaction to the overnight inventory, but we have higher volume. That's another thing, right? That's one thing. We have higher volume. That's one thing. The other thing is the market single print. This is a sign of weakness, no? Market getting out of previous day range, in the single printing, and in the same way. And this is what trading is about. In the same way, how we here have something like this, Are we going to have something like this today? Hmm? No, that's the one possibility, right? Remember, the odds here with this period, taking this high out, the odds are we have a rotational market. Now, rotation means not just means trading back and forth inside this range, inside this area, right? But you can have a directional move, and then a retracement, a rally, or may have a rally, and then a pullback, or another break. You know what's going to be? Who knows? You know? Who knows? Nobody knows that. If you know somebody who knows, please let me know. I would be forever grateful with you. I will have a debt with you for life. You know, nobody knows that. That's the thing. What we do here as a short-term traders, and that's another concept that James also teaches all the time, right? He tries to highlight that, right? What we do, what we are, what you want to be, has to be very, you have to define what you want to be, what you are. And that part of knowing yourself is very important, because you will get to know what your strengths are, what your weaknesses are, and we have better odds, right, when we identify those things and try instead of working in getting rid of our strengths of weakness, or making our weakness strengths. Identify those ones and work with our strengths. Use our strengths, and you can be very decisive. You can have throughout. What's this word? You can have a meaningful way of thinking, right? Our process of thinking can be developed. You can be very analytic, right? And instead of it can be a weakness, we can be a strength, depending how you see yourself. That's the thing, how you see yourself. And that's why everybody's different in this business. We go through the same path, same journey, but we have a different journey. That sounds really stupid. Now, this low, remember the market was being bought here from this box, was being sold and bought from this low. Now the sellers or the weak buyers have been removed now. Just by the fact that this market came down here, those ones are out. And the market coming up here, the sellers are out. Those kind of sellers. So what's going to be? I don't know. I really don't know. I really don't know what's going to happen. I don't want to tell you, and this is very important too, I don't want to tell you what I am doing, because this will interfere with your process, with your thinking process. You may be thinking something, you may be positioned to the downside or to the upside, and you may have your points of view why you are doing that. If I tell you what I am doing, and why I'm doing, that can get in the way, especially if you are building your perspective of the market. Starting to have your own opinion on the market. That's why I don't say that. Also, the fact that you or somebody is positive or negative, or the fact that somebody did 200, somebody did 2,000, somebody did 20, it really doesn't matter. I think it's very dangerous. It puts unnecessary pressure in other traders. It's not helpful. It doesn't help. It hurts. I believe that hurts. That hurts you. I think it's more. I think that's a good thing, right? You know, I consider myself old also. I am very old. You know, and that saying, right? All dogs cannot learn new tricks, right? We have habits that are very rooted, right? In our brains, right? I come from my background is I am chemist, technician. You know, in chemistry and being working in laboratories, you know, you have to be extremely precise, exact, very exact. When weightings, when you take samples, you have to take the exact amount of sample. You know, there is nothing like I'm going to measure 5 grams, right? But I have to measure 5.0000 grams, right? I have to use 4 decimals for my samples. You know the amount of exactness that is, right? And come back and do that, and come back and trade. Come back to this come to this business having that background, right? It's so hard. That thing that helped me a little bit is when I came to the United States, I started working in construction, right? And something I noticed in construction is all my co-workers, when they have any doubts, they went straight to the foreman and asked, "What do I do here? What do I do? What do I do? Why do I do?" And you know, the company on that specific project had like 200, 300 people. That foreman has like 50, 100 people under his command, right? And you can imagine, the guy couldn't do anything because people was just and was asking all the time. And one of my co-workers, one day said, and I had that mentality also, right? Because I was exact, and I thought that, you know, when you build something, you have to follow the steps. There's a process, and I have to go step by step. And this guy just says, "What the heck are you doing?" And, you know, we were a bunch of people. "What the heck are you doing? Do what you think is good, all right? Do what you think is good. Figure out yourself the answer, all right?" And he has kind of like 10, 15 years experience in that company. And what he said really opened my eyes, right? In construction, it doesn't matter really how you do the things, but how the product looks at the end, right? that was kind of like the beginning of something. That part, that little anecdote, that little process, teach me something, right? And a lot of people was very upset, really hate the foreman, because they don't understand. They don't understand that you have a lot of people asking questions. Then people don't let you do your work. Now I said the short was bad. Now the longs look really bad here now. You know, buying from here, this label has been taken. We may see some back and forth here. Man, but the good thing is you have a product. The good thing is you have a product. And you can, once you have something, you can work on that. You can make adjustments, you can do something. Right? If it doesn't work, do something. You test it. And what Jim says is also traders run out of money before they learn, and that's really true, right? Once I learn, okay, look at this, man, look at this, when I see this kind of look at what we have here, how this histogram looks like, and what it has here. This is, when I see this, the next thing is either a big break here, or this is a stop hunting, and then we have a rally here after this. You know, the market may start building here adding volume here and slowly work its way down. This also, what's going to be? I have no idea, man. I have no idea. I was talking about Jim, and when he said traders, may actually lose all their capital before they have an opportunity, right? Is, and when I realized when he said he lost like $500,000 before become profitable. Oh, okay, I said, boy, man, I don't have that money. If I had that money, I would be trading. But everybody's different. Everybody starts from something, somewhere, and volume is decreasing a little bit, and this can be good, right? Because the rally is not having, volume is decreasing when the market is going high. That can be good to the downside. I don't know. It looked back to the longs, right? Now it looks back to the shorts. Can you see here? Coming exactly from this area. Right? It doesn't mean that I'm going to be long here. It's just I'm keep watching. Right? Because of what he said, because of that, I think something really interesting is, and this is what I learned from JJ. I have never been in any of his courses, but there are these prop firms, right, that can give you, you don't risk much there. You can have a trial, or you can try, and what you risk there, I mean, if you have to prove you have to prove that you are good, you have something. If you have something, you get funded. But first you have to prove it, and to prove it, you have to reach certain amount of profits and be consistent. Basically what everybody has what all successful traders do, right? Be consistent. That's the key. It doesn't matter how much or how big you, but consistent. Now this is having some momentum. Let's see if POC is moving lower. Let's see if POC can come back up to here, for example. That will be another thing. And you have these prop firms, right? And we can risk $100, $50, $30, something stuff like that. And you have Apex, you have Top Steps. There's another ones too. I have tried these two. I am into this one, right? And the thing is, you don't risk your capital, but you still can. It's not a sim, because there is something. It is a sim, but it has some risk there. The risk of simulators are that you are not risking anything, and you can go full, right? And you can actually gamble there. And this is not gamble. This is not gambling. This business is nothing but gamble. Because when you gamble, you don't have to do anything to win or to lose. You don't have to do anything. And this is not gambling. If you are, let's see, if you are short up here, you have to do something to take your profits. If you are short down here, you have to do something to take your losses. Right? What you lose or what you win, it is upon you. It depends on you and only you. It doesn't depend on the market. The market doesn't do anything. It is you that you do everything here. And that's why all the answers in this business, all the answers that we are looking for are just inside of us. We have all the answers. And the only people that are at the end, the ultimate, guy or person that you are competing against or comparing against is just yourself, nobody else. No, that's another reason why I think that it's very counterproductive to compare or to put, you know, to be displaying profits or losses, you know, publicly. I don't like it. I don't agree with that thing. I think that's make is more hurtful than helpful. I remember one of the biggest losses is, you know, when you have this. I still remember that day. You have the headlight deer effect. It's called something like that. When you see, right, when you see what the market is doing, the market is moving against you, and you don't do anything, you know you have to close your loss, and you just see your losses getting bigger and bigger and bigger and bigger and bigger. God damn it, what's, you know, this market cannot go any higher, or this market cannot go any lower. Yeah. Things like that. I mean, when he said in a conscious manner, $100 on a trade you know will fail. I think that's, I don't know, man. I have I have my doubts about that. I think I think better would be, let's see, for example, you have an inside bar. Value is lower here. You have an inside bar. How long for to the end of this period? Still, it's just starting, right? Your strategy says, okay, we'll go with breakout inside bar, preferably in the direction of the trend. What is the trend? What we are having? Do that, right? That would be the conscious, right? The conscious trade, and know what the market needs to do, what the market, how are you going to get out, how are you getting to take profits, where you can take profits, what the market needs to do. And sometimes, you know, the best trades, you know, is the trade that you don't take. No? Also, but things like that. I guess that's what he means. He means when he said in a conscious manner, right? But if you know you're going to lose, I mean, why you would do that? Right? Why I would take, if I, and that can be very counter for me. This is my very, very personal opinion, right? Because you're assuming something there, something that is that you know that the market will fail. Okay? If you know the market will fail, the underlying of that is that you also know when the market will not fail. Right? And nobody knows that. That's the business is in uncertainty. We don't know what is going to happen. We have our work, we base our decisions in odds. Right? We are odd based here. We have today, we have value, lower, change happened yesterday, single printed is way down, nothing here, the market did not, this can be something, the market did not get inside single prints, the market did not get inside. Yesterday there was tremendous pressure to the downside, and there was a resolution to the downside. That's still in the mind of traders. This market is going to keep selling, and at the closing it's going to have a big break. That's the thing traders remember. How many times I have think, if I do just the opposite of what I'm doing, that would be fine. I would be fine, right? That's what we think, right? Every time I get long, the market goes to the downside. Every time I short the market is rally. Oh, the next time I will do well, just the opposite of what I am thinking I will do. And that also is not productive. Okay? Because because that because what that thing is doing is, you're not taking responsibility. You're not being you're not being held, you're not being accountable to yourself. If you have a trade, you have to develop something, right? You have to develop a strategy. When do I enter the market? Why I enter? Why I close? When I close? What? Stuff, questions like that. And that is the process that will lead me to a better, to be a better trader. How long is it going to take? I have no idea. I'm going to take a lot of losses. And that's another thing, right? This business is about losing. The book, and that's another thing. That's another thing. Before I get that book, the ¿cómo es? The Very Elusive Wings by Tom Hogarth. Before the gym, right? I'm okay. I got that. I started to pay attention to Tom Hogarth. I was watching his webinar. I was watching his mentor, David. I don't know. I don't remember his name. And come on, eh? And I got. Just after I started to do that, Jim talks about him, right? And okay, that's when you kind of like get confirmation, right? That you are in, because you cannot depend upon others. You cannot be others dependent on other people's opinion, right? But we always need somebody that can have, something, maybe something. I am also not the type of trader as Tom. Tom Hogarth is a different type of trader. I'm not like him. I am not like Jim. Also, I am not like Peter Lesnick. Peter Lesnick has a lot of technicians, a lot of things for trading. I'm not like JJ. I may have, but I have learned try to understand what they do, right? I know what they do. All right. Now we have an inside bar here. And still 12 minutes into this period, we have an inside bar. Can this be a rotation here? Notice that every time the market tries to break through this level, it's having less and less. I just did not like this thing here, the way how this market left this tail here. I didn't like it. Remember when the market did this, we say that it may look like a stop hunting here. This also gonna mislead traders here. This thing here. How do I see stop hunting? And remember those terms are you know, retail, retail expressions, right? Now this thing, you know, when the market was here, when the market was here, going high, right? Market was buying and selling from this level here, you know. Yesterday's low, buying, selling, buying, selling. It comes here. We have this low here, the pullback low to hard back that was corrected. And when the market came here very close to hard back, to previous period hard back, it just had like a, you know, what James calls, when James says, you know, the wheel, the barrel, you know, the speed, the barrel runs faster at the end of the hill. That expression, right? It's just boom, that has a spike like tum, 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 and it just dies. It just dies there, right? And what people calls stop hunting is what James calls, you know, the wheel runs faster, or the cartwheel runs faster, or the wagon runs faster at the end of the hill when it has the most momentum, and then it just dies there. How do I know that? I don't know. Just after the things we know, we can say that just after the fact. Right? Just after the fact. Now we are 15 minutes into the period. This period did not have breakout of the high, breakout of the low. Half into the period is working its way higher here. Value is lower. We're having second thoughts about this market. But this break here, what this break does, it just make you to get fixated, right, in price to the lower side. How do you get rid of that thinking? Because this market is going to break, right? The market is going to come back to check this one. I cannot get rid of that thoughts. It's still there. It's going to be there because you are just following price, right? That thing. And we forgot to monitor what happened here, for example, right? What's happening here? The market is trading back and forth from these lows. There's back and forth from these lows. Now, POC is right at center. We have significant amount of single prints above. Market single print is way down. Okay, what about next time? Next period doesn't come close or doesn't take this low out. That can be, you know, that can be a potential entry. Because if I am wrong, the market will need to move really, really low. It doesn't have to move that much from this reference for me to know that I am wrong. Or it can be to the lower side as well, you know. What about if the market, the next period opens down here and doesn't take this low? That can be my short. But where is POC? POC is higher. If market opens below this reference, POC will not be here anymore. POC will be here, with the potential of moving lower if the next period opens below D or trades below D, because this will be 4 wide now. POC will be here, and if it keeps going lower, if trading in this area, POC will move lower. And those kind of scenarios, I'm always thinking, right? What if, right? What if? Okay, it may happen, it might not. And then you just keep moving, just keep thinking, you know, keep moving with the market. No, firecracker, no here. Firecracker is more like, let me see. Let me see where we have that potential. Not here. What about here? not here. Not here. I didn't see anything. I haven't seen that in a while. Well, I don't remember anyway. But that happens. Now, if you have, okay. We have these levels, right? We have these levels here. 52.7. 56 here, for example, 20, 52, 1 point below, another point above, things like that, right? And the market, for example, if you are going higher, market goes right. The other one is really close, a couple ticks from this low. The other one really close to this low. The other one really close to that. So this is firecracker effect for this. And what happened here? What happens here is, you know, let me move this chart back up here. What happens here is what we have seen here, for example, in this. Okay, let's do another screenshot. Come on, a screenshot of, oh man, it went away. Okay, you remember this part here? Remember I said when we talked that we say that this is, I don't like this part here, how this was made, right? Because what happened here is what can happen in this, but this is just different time frame. Like this is different time frame. Now what happens, this is 30 minutes period, you have stops here, you have stops here, you have stops here, you have stops here, you have a bunch of stops about here, because the more the market trades above this area, the more likely, the higher the odds that the traders that come to buy the market are going to place their stops around this area. And when that happens, the market tends to not just come back up down here, but have some kind of extension to the downside, and which is what happened here. What happened here is it kind of like overshoots, right? Overshoots way out, and then boom, keeps going higher. It removes those ones, so it can keep going higher again. And now the market is back inside this range again. Okay. Now I want to see. I want to see now if the market starts to build volume around this area. Around this area here. Okay, if I see some reds or purples here in this area. Right now it's dry here, right? Maybe I see something like that. That would be awesome. Because remember, this huge amount here doesn't have volume, you know. I like the taper that happens. Really nice taper is when I see this medium color. Jim has this as a pink. I changed mine to a dark pink so I can see better. When I have something nice, I don't know. Well, we have to see it. Have to see it. And these lows here are kind of like too far from each other to have the potential firecracker effect here. You know, we need some selling pressure here to the downside to, you know, to take this area, for example. No? The firecracker effect happens fast. Now this level is weakening. This level now, notice what can happen to POC, right? POC could very well be down here. If the next period opens in here in this area, that could be good for POC. Good also, POC can move lower. That's one thing. Another thing here, for example, all right, if this period have downside extension, is, you know, this can be just a rally, you know, a rally to remove weak short inventory. And POC, especially if the market takes this low, you know, this is going to be a trend day. It's barely, you know. Oh, by the way, I forgot my something very important today. It's my pills. Now, to answer your question, right, is a firecracker. Well, I guess we talk about that. To the downside is possible. As we one time frame higher or zero, the stop hunting, reduce odds to come back low, and that's the thing, right? That's a good question that you have there, but that's a question that has to be asked. If I have explained that, right? But you need to observe the market, right? Because when I say it, when I answer that question, uh, later in the next period you will forget what I have said. And but if you answer that question, but based on observation, especially if you have placed a trade there, you won't forget. You won't forget that because of the loss or because of the win, right? Um, at least in my case, is about context, right? Just as Jim says, just as he said, everything's about context. Everything's about context. Everything has to be seen in context. Nasdaq has taken this low. Nasdaq now has started a rotation. Where Nasdaq can go is the question. Maybe here. This is the next reference in the lower side in Nasdaq, and the next thing. No, Nasdaq Nasdaq has taken most of the single prints here. Nasdaq isn't better. Nasdaq is better positioned. I think from my point of view, it's still downside day. This is weak here, right? These two markets are trading different here. And the opportunity, there was one opportunity today, right? There was one opportunity here. Just one. Oh, we don't know, man. Are we on a rotation? Well, I mean, this is a rotational market, right? Because the market was breaking. It kind of like tried to establish one time frame lower here, a trend to the downside, but she ended that. She ended that. There's no more. There's no more a trend. I mean, this cuts a possibility of being a trending day because there's a rotation here. Now the action to the upside still remains unless this low is taken by 2 or 3 ticks. This is still the action is still to the upside. Now because I trade in 1 tick, this now is an action to the downside. Now the one time frame, there's a second rotation is in progress now. Is this rotation going to take this level from yesterday? Is going to have downside extension? Who knows? No, always check your clock as well. Remember where the market was around the 6-minute mark. We have less than 2 minutes to go, and the market's right at the lower side of this, at the lower side of this bar here. For anything to the upside, this market will need to go higher really fast here to open up here and work its way higher here. I don't see, to be honest, don't see much here right now. It's a rotational market, and this looks like like long liquidation, right? Starting to look like long liquidation now. The wider this becomes, the harder for the market to move value lower or higher. the concept, right? The key here, right? The new thing for me, right? And this is really funny, for at least for me, right? I'm kind of crazy. You know, you have something here, right? You got something here. I didn't see this. The way how Jim talk about this, I didn't see it that way. That's something that I am adding, right? I'm adding. You know, the fact that this law could have been, I had this as a weak low. For me, there will be change in this market now. Now that this low has been taken, like that this level has taken, that's change for me. No? But for Jim, the market has changed yesterday. There was change yesterday. You know, I can see how delayed am I? I'm really delayed, right? I'm really late. And that's the thing. That's another thing that in the learning process. For example, identify the trade, right? Okay, trade is here. This is a short, the market is low. Okay, and I used to short here or here. and by the time market comes here, the trade is done, right? Now I will check. Look at this low here. Look at this area here, right? Markets obviously pushing to the downside. Do or can shorts, can this pressure be released to the downside? And going back to the trade, right? Once I identify the trade, and I say, okay, now the market came down here, I know the trade was up here. Okay, but I am late, right? Or the market has this high, and I'm shorting here. But I am late, I am 2 periods late, I'm 1 hour late. How do I do, right? So my goal is to see the opportunity here, or see something here, or something developing, let's see, and that's why you come to the realization that you have to be, the most important thing is to be present in the market. To be present, and when you are present, just as you say, opportunities just show up. You know, the trade shows. Okay, you got just that kind of like a thinking, spider thinking. Now this is too low, man. This is 3Y now. Come on, man. Come on, really? Are you going to leave this low like that? Yesterday, you know, there was tremendous pressure to the downside, but the market was moving higher. And today, if this continues, this is what the potential here is a 45. Now, the 45 is not a trade, really. It's just an indication of the risk that, in this case, the long may have. It doesn't mean the market cannot rally. As a matter of fact, the trade comes after, right? The trade actually is just, this is an indication of the risk in the long side, right? The risk in the long side is getting higher. But if there's a break here, there's a rally, the potential trade is to the opposite side. Maybe not today, right? That's the thing. Now I may start thinking, what do we have here? The 26. That would be this area. That is 60, 60, 51, 60. How much? Oh, those are 4 points. God damn. This area here. Oh, look at this. Look at this. Volume has increased. There was a little decrease, and now volume is resuming. PLC has moved lower. This period is below yesterday's low. Let's see now if the market can move PLC higher, or this period can get back inside this range. Oh boy. Now This is a nice area here. You know, the market just didn't happen, man. I was bought exactly from this. You know, it didn't touch the single prints here. There is that also. There's also something here. This is also telling us something. Now the buying is weakening here. While first each, you know, this is how changes, how things changing, right? We saw the selling was having less and less here, less and less, and now the buying is having less. Suddenly you realize the buyers are having less and less and less for the efforts. Now that question that you are we are in a rotational or a hybrid day. So what is the answer? So I think that's a question you can answer. Remember, there is not right and wrong here in this business per se, right? Because it all will depend of your point of view, of your time frame, or whatever the conditions you are, whatever point of view you may have. I think that's a question you may ask. What do you think? What kind of day are we having so far? This is rotational. It is a hybrid day. It is long liquidation. It is short covering. It is a balance. It is a breakout of balance. What it is. Right? All signs yesterday were pointing to that. To me, was pointing to that. In the morning, I said this was an inside bar, potential to the upside because the period has. This period has. This value was the range, was a narrow range, but it was to the upside. It was to the upside. Now the market has come back to this low again. PMI at 130. We don't have PMI, do we? We don't have PMI at 130. There's nothing left here today. There's nothing left. We have PPI today at 8:30 a.m. Eastern Time, and after that, there's nothing else. Tomorrow we have some settlements, consumer sentiment at 9:15. That's it. We don't have much. Now this 4160. How much are those ones now? 5160. 5160. This one 4 points. Now at 6. Does that? All right, I will just. Man, it's 11:40. But I guess I'm going to call it a day. The PPI it's over. It was 8:30. I don't know. I guess you need to check your time frame. I mean your times. This I have this calendar is using Eastern time. Now if you use Econo calendar here, this week, Friday PPI 8:30, you can change this and adapt this to your time. I guess you are in France, right? That is minus 4, that's minus 9. 30 again? No, it's minus 1 then. Minus 4, no, this is plus 2, something like that. It has already happened. What time do you have? It's just easy, right? What time are you? What time do you have? It should be 4:40. Yeah, 4:40. Huh? Yeah. So now, how much time has passed? Maybe 10 to 10 to that's 2 hours. You have 4:40. That would be 4 hours, 5 hours from now. So this is 4 hours. This should be 11:30 for you. I guess here. No, here. I guess this is the time. I think this is your time. Should be your time. And this is trading. This is another calendar. Now I don't know how to change this thing here. But my time zone is this. Mine's 4. Oh. This is a rotational market. This is a back and forth, back and forth. And now POC, this market has come back. Where POC was? POC is moving lower, right? A little bit lower than hardback. But this is rotation. I don't like this. I don't like this. Let me see. I want to see what the market can do relative to these lows here. Can POC? The most important thing I think will be if what happened to POC. If POC can move lower. There was an attempt to move POC lower. POC was here when the market opened, and it was moved higher. And the wider and the longer this range is, I mean the wider and longer is range, the more valuable of this POC here, right? If the next period opens here and trades higher, POC will remain the range here. It can be anywhere within this area, within this area. Remember what happened yesterday? We had a break. We had a break yesterday. Kind of like around midnight, around noon, or mid-season, kind of like close. What time? Let's check this one. And this is in the mind of traders. Oh, we have a break. We had a break. Now I'm not going to wait until this time. I'm going to be short now. I'm going to be short. I'm going to be, when the market breaks here, I'm going to be, counting dollars, counting my profits. That's how traders think as well. That's what Jim says. Try to get in the mind of your competence. Man, we all have been there. Unless you know now, identifying the trade. Oh, okay. Identifying the trade is also important, right? Because if we don't know the trade, this is the distribution model, right? If we don't know the trade, how can I know that where the innovators were, where the early adopters, early majority, late majority? How do we know, right? Laggards don't always have it wrong, because if this had wrong all the time, boy, there won't be opportunities in this market. If this went right all the time, the market, we didn't have any chance. It's not always happen like that. This is just a distribution model. But when you identify the trade, what happened here relative to this day, I guess it was, I don't know, it was somewhere in here. when you identify the trade, then you can figure out what stage that trade can be. All right, and that's the thing that you need to go through, right? Identify the trade, whatever trade it is. It can be yours, it can be and then you start working from that. This is a big trade, this is a longer trade, this is a short-term trade. Rotational markets don't give us too much opportunities. I mean, too wide extended trades. For example, right? In rotational markets, you take profits, small profit, you do more trades. You may do more trades and take small profits. Trading days, the odds are kind of like a longer runs. Rotations are different. Now, what can happen here, right? What this can be, right? What are the issues? What is happening here? You were talking about the firecracker effect. There's no firecracker effect here. The market just can't come through, through this area with fury. But what can happen if this don't happen? Yeah, all of the shorts here of today's. Remember, this is long inventory. This could be a rebalancing of long inventory. Market is short now. Saddle is up here. Market is short. What can happen to the shorts here? This has no excess here. This has no excess here. All-time high is really close. There can be a gigantic short squeeze here. And tomorrow we have Friday. It's another day. Friday is another day, another opportunity. Going into close into the end of the week. All previous weeks were to the upside, making new highs. Every single week, basically, made a new high. We didn't have this week. We didn't have that this week. But when you identify the trade, okay, I know, god damn, I don't want to be here. But how come I always short the market here, I always short the market here? How come? I maybe, the most part of the money is made here. I maybe this area could be, this area. Let's erase this too much thing. When the market take this, there was a reference here. Oh, where it was, I don't remember where it was. What is that? This pullback low. Okay, this pullback low is down here. This could be the late majority could be here, maybe. Early majority, I wouldn't call it early majority. Boy, this is hard now. This is hard. But now you can identify, right? Laggards is here. Right? Maybe okay. Early this area here could be this area here, right? Late. Okay, but now the trade may come to an end. There will be times when the market will just keep going straight lower and lower and lower and out of the screen, right? But you never know that. Those kind of days doesn't happen that often, but they leave they leave big impressions in our minds. We are just waiting for one day like that. I'm going to cash one of these days. I'm going to cash those days, and I'm going to stop trading. I'm going to make it. I'm going to make up all the losses I had before with one day. Until that happens, that's another thing. All right, my friend. Have a wonderful day. Stay safe. It's always a pleasure to have somebody there on the other side. I really like your time zone because you can have a daily job and then trade afterwards. And I think that's perfect, right? If you have a job, a 9-to-5 job, when you come to the market is after the opening, after 2 or 3 periods have passed already, and the market may have settled. That's when opportunities can start to form. I really like that. All right, man. Have a wonderful day. Stay safe. See you tomorrow. Hope I can see you tomorrow. Bye bye.